Erian, who's a long-time friend of European House Ambrosetti. Going to be one of the voices that will start setting the tone of our conversation this afternoon. So Mohamed, the floor is yours for 15 minutes.
Thank you, Monica, and thank you, everybody. It's wonderful to be with you. And a special thanks to Valerio, to Alice, and to all our friends and colleagues at the European House Ambrosetti for bringing us together. I have been asked to talk about some specific risks, which I will do so. But I will do so in a context, because I think that these risks are part of a much bigger picture that companies, households, governments, investors all have to navigate through. So I will talk about the three risks that were posed to me: COVID, US, China, and the tensions within the EU. But again, you'll see me pivot quickly to the bigger picture. Now, why do I say that? Those of you who were with us 2 years ago will remember that I had an opportunity to speak at a similar panel. I think Jacob was on it at the time, even perhaps Richard as well. And I remember starting it by saying, we live in a world in which unthinkables have become reality. And I cited the following: the election of President Trump, the negative interest rates for almost 30% of government bonds at that time. This notion that you lend your money and you pay for the privilege of lending your money. Absurd, but it has happened. The notion of the US becoming the most protectionist country. It was once the champion of free trade. And I posed the question, what probability would we have given each of us, not just to every event, but to every event happening at the same time? And the answer for most of us was very low. But these happen. Now, of course, one of the biggest tail risks, if you like, almost unthinkables, was that we would have a pandemic, and that pandemic would stay with us and basically change everything we are doing. And it's part of a process of unusual uncertainty that we are going to all operate with for a while. This is not in any way, I want to stress, denying the very exciting news that we received for 2 Mondays in a row about the vaccine. And it is great news. If you can have effectiveness of over 90%, it facilitates regulatory approvals, it facilitates rollout, adoption, and hopefully herd immunity. But it's still part of a very bumpy journey to an uncertain destination. Let's start with COVID. Let me just make a very few comments. In my mind, there are 4 things that are critical about COVID. First and foremost, it is an unequal shock. It is unequal across the world, it's unequal within countries. It not only worsens income and wealth inequality, it worsens the inequality of opportunity, which gives it a longer-term scarring element. It is not just temporary and reversible shocks. There are a more long-term nature to them. And the next 6 and 9 months are going to make the scarring worse. We talked earlier in the introduction about how China, Taiwan, other countries have been able to overcome COVID, or at least live better with COVID, while Europe and the US are having a terrible time, a tragic time. To understand why, simplify it. And this is the reality not just of governments, but it's the reality of households, of companies. We are trying to balance 3 things. 1, health, public health. 2, as normal economic and social interactions as possible. And 3, personal freedoms. That is an inherently difficult equation to solve. I can tell you, I am in a university context. We've run an in-person term, and we've been trying to balance this. And it's hard. Now, if you are China, or if you have the collective responsibility of a Taiwan or a Singapore or a Japan or Korea, you're really only solving a 2-variable equation, which is easier. But the West has a 3-variable equation, and as a result, it's going to be a very bumpy journey until we get to herd immunity, which will make the scarring worse. The second thing I want to stress is the great disconnect. Yes, the economy has been hit hard, but if you are accessing the public markets, bonds, equities, you're doing really well. If you're an investor, you have record returns on many holdings, especially on technology holdings. The NASDAQ is up over 30% this year alone. Even the S&P and Dow Jones are in positive territory. Europe is in negative, but not that bad. You've also made money on your bonds. If you're a company, you've been able to access financing very easily at low cost. Finance or Wall Street has done great. The economy or Main Street has not. And this great disconnect is, of course, in great part due to central banks, but it involves an extra element of long-term uncertainty that we are dealing with. The third takeaway is behavioral science matter, and we better learn more about behavioral science. It matters in terms of how households react to individual risk, how they internalize the risk that they pose to others, and it matters in terms of how markets decide to react to central banks and get conditioned by that, as opposed to deciding to the real economy. So if we bring all this together, we're supplementing on top of that China-US tensions. And I come to this from a very easy, simple perspective. And that perspective is due to my friend, Michael Spence, who is in Milan. He is a Nobel Prize winner. And he has spent quite a bit of time in the last few years looking at China and understanding China and the real economy. And he once told me, you've got to understand how different perceptions are. The West, and the US in particular, sees China as the second largest economy, soon to become the largest economy, as a threat. And as a country that has taken advantage of the global economy, including the WTO terms, without abiding to its international responsibility. And the examples of that are intellectual property rights, free access to the service sector, joint venture requirements, you know the list. So it's time for China to live up to these responsibilities. And if the carrot approach hasn't worked, we need to use the stick. And the stick is the weaponization of tariffs and the weaponization of investment sanctions. And of course, once you do that, you also enable it for national security reasons. China is, dependent on who you look at, the IMF, the World Bank, or the UN, somewhere between the mid-50s and the low 70s ranking in terms of per capita income. The mindset is not of a world power. The mindset is of a middle-income countries trying to get through the middle-income transition and focusing on massive internal transformation. And the other mindset there is, do we really want to live in a global system that is anchored by the US, that judging from the crisis, has not behaved in a responsible manner? So this is a fundamental difference of point of view, and it is not going to go away under a Biden administration. In fact, as my colleagues, I'm sure, will agree, if there's one thing that the US lawmakers agree on, Democrats and Republicans, is it's time to stand up to China. This matters most for what I call the dual option countries, Italy being one, but the others are Australia, to a certain extent the UK, Singapore. So what do I mean by that? These countries have run for years two options, and the cost of these options have been very low. And if ever you're offered a low-cost option, you should take it. Option number one is a claim on the US for national security. Option number two is economic and investment relations with China. Italy is part of the Belt and Road Initiative, as an example. Australia has China as its biggest trading partner. That dual option was a free option to have. Now the US is saying, wait a minute, let's price it better. And let's price it better in technology to begin with. But it's not going to stop there. So when you're looking at the risk, think of what this dual option model is exposed to. The last thing most of these countries want is to be forced to make the choice that the UK had to make with Huawei, with 5G technology. And then there's the EU risk. Here, I'm actually going to be more positive. I think that risk has gone down. I think that we saw a major step being taken towards better fiscal integration. And better fiscal integration is part of a stronger Eurozone architect that makes it less fragile. It doesn't mean there aren't issues. Of course, there's Brexit. Of course, there's East-West divides. But the architecture of the Eurozone in particular has made a step. Now, what does it imply? And this is where I will conclude. Whether you are investing through this world of unusual uncertainty, financially or in companies, you've got to be tactical as well as strategic and secular. This is not a world in which you have the sort of certainty you need for big secular and strategic decisions. You've got to do a lot of granular analysis. Resilience matters a great deal. Whether it's endogenous resilience from the balance sheets you have, or exogenous resilience from the protection you have from somebody else with a much bigger balance sheet. Resilience is key. You've got to be open to dynamically allocate and change your mindset. I'm always intrigued by people who say, yes, there's a high risk multilateral. There's a high risk associated with the dual option model and with China. And I am focusing more on resilience now of supply chains than efficiency of supply chains. And then you say, well, are you abandoning China? Say, oh, of course not. My new mantra is work towards in China for China. Meaning, of course, I want to be in China. It's the second and soon to be biggest market in the world, but I will not supply the rest of the world from China. And then lots of scenario planning, understanding the nature of mistakes. We will make mistakes. We don't want to make mistakes, but when the world is unusually uncertain, we will make mistakes. And the best way of minimizing mistakes is through scenario planning and understanding the nature of your mistake. Let me end up by saying we will see massive dispersion of outcomes in the next few years, massive. There will be the strong getting stronger, the weak getting weaker. There will be some attempts at helping each other. There'll be lots of attempts at undermining each other. And without that mix of resilience, agility to act quickly, and optionality, properly priced optionality, it will be a very difficult environment to navigate. Thank you.
Thank you so very much. Thank you so much, Mohamed. It's not surprising, but as usual, it's so enlightening listening to you because you're really able to give us insights and different perspectives when we read the reality. So thanks a lot, but we will be back to you with the questions of our friends this afternoon. But